Hello traders, this is day number 24 of my small cap market open day trading. I've written a plan, very specific plan to trade small cap stocks. Why? Because they're extremely popular for new traders to trade, but they're also extremely risky and extremely volatile. So I wanted to have a well-defined trading plan that would allow you to take at least 100 trades and not put your account at risk. So far, we've taken 34 trades and we've actually made money testing these small cap trades, even though the whole point of this thing is not to make money, it's just to track whether or not this thing's going to be profitable. And that's a video that I release every Sunday showing you the results so far. So there's a video that came out yesterday showing you where we're at before this trade. Today was trade number 35, I believe. And this plan, if you're interested in, I did release the beta version of it on my Patreon page. That's patreon.com/tradingarmor. It's at the battle plans tier level. That's the highest tier level. It comes with everything that is available on my Patreon page. So that means that you're going to get all of my trading plans. I have a small cap trading plan, a mid cap trading plan, swing trading plan for swing trading SPXL, binary options trading plan, and below that, I have spreadsheets and trading calculators available. So if you're interested in that, that's all at patreon.com/tradingarmor. So let me show you the stock that I traded today using my small cap screener. To find it here, I always click on the three little dots and click modify. And this makes sure that my filters are applied. That's extremely important. So then you organize the list by volume. I'm only interested in stocks that are trading with 500,000 shares or more right at the open. We're a little more than an hour after the open, so there's a lot more volume. But this morning it was a little bit confusing because you opened this up and there was a ton of green stocks, but a lot of them didn't have the volume. There was only a few here at the top that had 500,000 shares or more, and I kind of messed that up at the beginning, and I was putting stocks on my chart page that didn't have the required volume, but I did realize it before I took any trades. But it's something you have to be very careful of. You could be teased by, a big percent gainer or something like that. But if the volume isn't there, I wouldn't touch it. So let's take a look at the video now, and you'll see me put these stocks on my chart page, and many of these did not have the required volume. But as I said, I didn't trade them. JSPR, that was one of them that ended up not having the volume. And let's see what else. Either that or it got halted. I'm honestly not that sure on JSPR. I know it did disappear from the screener at one point. And then HUT, that was the one that I ended up trading, which it may or may not be on the small cap screener right now because it's been bouncing in and out of the small cap definition, which is up to $2 billion. And market capitalization. So right now it doesn't appear to be on it. It was about 1.1 billion when I was trading it, and it's been kind of going from the small cap to the mid cap segment as the morning plays out. So HUT, now the other thing that was kind of tricky here, and this really, I don't think this has happened the entire time I've been trading small caps or mid caps. The price action was a little bit tricky to read based on my definition of the high of day and the pullback and all that kind of stuff. I'll explain all of that as we get into it. But the good news is, no matter how you read this thing, the trade would have gone to the 2-hour profit target without getting stopped out, regardless of which area you define as the first high of day, second high of day. And I'll show you that once we blow this thing up to one single chart. And VET was also looking really strong. That might have given a 2-hour trade, but I'm not sure. So here we go. So let me explain my entry and the entry criteria and all that kind of stuff. So first of all, if you look at HUT on the daily chart, it's trading above the 200 MA line. If that wasn't the case, I couldn't even have this on my chart page. So that's criteria number one. Second, it must break out through the previous day high. That's marked out right here, this first yellow line. And then I have to wait for it to establish a high of day. So when I see the price action ascending like this, as soon as that kind of ascension stops, that's where I mark out the high of day. So this is where I was a bit confused because generally I define the first high of day, the top of the price range before a pullback. And even this one red candle here is a pullback because the price opened here and it closed here. So that is a pullback. So that's where I originally defined the first high of day. And then that makes this the second high of day. And this becomes the pullback. And this is your entry right here. So that is where I entered when the price came back down to this level, because I don't know if you saw on the previous page, I missed the entry initially, but as long as the 2-hour profit target doesn't get hit, which it didn't, because you could see it's way up here, when the price comes back down and retests, I can get in at the same price. So I got in at 11 when the price was at 11.94, which is my ideal entry. The top of this candle here is 11.93. So at 11.94, I triggered my hotkeys and I got filled at 11.95. 1 cent slippage, not a big deal at all, especially with a stock of this price. And then my stop loss goes just below the low of the previous candle that I entered on. The only exception to that is if the candle that I enter on is even bigger, meaning, or not bigger, but that the bottom range is even lower than the previous candle. But that wasn't the case here. And now, once I'm in the trade, then I use my 2-hour calculator. You saw me use that earlier to give me my profit target. And then I'm done with the trade, other than maybe marking out a few levels. Like I have to define where the stock is weak. And if it breaks down below that level, I can't trade it anymore. And that ends up being the bottom of this candle here. So you can see the price is pulling back down pretty hard right now. But I'm already in the trade. I have my stop loss in place. I don't have to worry about this. If it hits my stop loss and stops me out, I'm done trading for the day, because this is the point of weakness on the stock for me. And the reason why I consider the stock to be weak if it breaks this level is because the price action obviously was very strong. There was lots of buyers. Then there was some selling and the price pulled back to this level and found support here. And that's why it pushed back up. So if this is truly a support level, the price should stay up above that level. If it isn't, if it's a fake out or something like that, and the price comes down below that level, then I deem this stock to be weak and I don't want to trade it anymore. And it just so happens the way my entry worked out and the way the price action moved is that if I would have gotten stopped out on the first trade, I'd just be done trading for the day altogether, because I only trade 1 ticker symbol per day. That way I increase my chances of a winning trade, because my first trade right now works out about 33% of the time, which is break even. My second trade works out 50% of the time, which is well above break even. And my third trade works out 60% of the time. And that's always trading the same ticker symbol. So it's extremely important to just stick to 1 ticker symbol each day. That way I can improve my chances of one of these entries working out. If my first trade fails, I'm down 1R. If my second trade fails, I'm up 2R from that trade and I'll be up 1R overall. If my first and second trade fail, I'm down 2R. And if my third trade works out, I'm up 2R on that trade. And then that means that I'm at break even for the day. So that's kind of how the plan works. That's how the all or nothing 2R trading works. You could see the difference between my position price and the stop loss. That is my risk. And then my profit target is 2 times that level. So that's 2 times my risk. So that, again, is the key to the all or nothing 2-hour trading. So let's fast forward and see what happened here with the price. You can see there's some oscillation here. Nothing for me to worry about because I'm in the trade. I have my orders in place. And I don't try to judge the trade once I'm in it. Is it really going to work out or not? I don't care. I have my orders in place. There's only 2 possible outcomes. My stop loss gets hit and I lose 1R, or my profit target gets hit and I gain 2R. So let's see what happens. So fast forwarding here. Now the other thing I did was I marked out the profit target had I gotten in at this entry. This was the other entry that you could have argued this was the correct entry. But either way, both trades would have worked out. Neither trade would have stopped me out. And so it really makes no difference as far as, was the plan successful today or not. The only variation was, trader interpretation, which again, I try to make the plan so that there is no interpretation. It's very clear. But today the price action was so strange right here in this area, it made it a little bit tricky. But again, either interpretation, you would have been successful and had a 2-hour trade without getting stopped out on the very first trade. And that doesn't always happen. That's pretty much the exception to the rule. But that happened today, so that's what we're recording. And the other thing that I mark out is the 3R profit target. So at 1238 is where the price would go and hit 3 times my risk. And let's take a look at the chart right now. It had bounced off that level a few times, but I'm not sure if we would have gotten filled. But now definitely we would have gotten filled, because here it is. So here's where we were trading. This is our entry back here. Our profit target was here, and then this thing chopped around a bit and then went higher and bounced off of the 3R level 4 times actually. It may or may not have gotten filled there, because the let's see, if you're buying at the ask, you're selling at the bid. So that means that someone has to buy at the ask at your profit target at 1238 in order for you to get filled. And since it just bounced off that level, there is a chance you may have not gotten filled there. But notice that even when the price pulled back, it didn't go anywhere near the stop loss. So the 3R target would have been hit either way on the very first trade. It would have obviously taken a lot longer, but it doesn't matter. So we're going to record that as a 2R trade, and the 3R profit target was hit as well. So all of that information is collected, and then after we take 100 trades, we're going to see, was it better to hold to 2R or 3R? So anyway, the major point that I try to make in all of these videos is that no matter whether you're trading stocks, options, binary options, doesn't matter, swing trading, you should go into every single trade with a plan and stick to that plan no matter what. And you have to take a lot of trades with that plan. This plan wasn't profitable for the first 2 weeks, and now it is, and we're, I think, about 5 weeks into this. So it takes time for the statistics to play out. So you must take at least 100 trades with whatever plan you're trading. And that might seem scary, because you might think, oh, I'm going to lose a lot of money if the plan doesn't work. Well, that's why you trade just one single share until you've taken those 100 trades and you've proven it profitable. So anyway, as I said, always have a plan going into every trade and stick to it no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.